Hi guys, welcome everyone to the Spaces with Kalu this Saturday. How you all doing? Hope you're all doing fine. Hope you're all making money. Today we've got Tunde Amolegbe with us here, and he is the president of the Chartered Institute of Stockbrokers, as well as the managing director and CEO of Arthur Stevens Asset Management. So we are pleased to have him here with us. I'm just gonna add him here and then we can get going. We also have Obia Nuju also here. She's our co-host and she just helps us to keep the room tidy and organized so she can read the messages and all that. So Obi, hi, you want to say hello to everyone?
Hi everyone. Good to have everyone on the session tonight.
Great, thank you. Hi, so I just sent some invites to Tunde. Tunde, if you are here, you can come off mute and just say hello. I think I've added you as a speaker. Just say hello, make sure we have you in here, and then we can go ahead and start.
Okay, good morning, good afternoon, and good evening to everyone here, and I'm Kalu.
Hi, Tunde.
Pleasure to be here.
Thank you. I can hear you. So we're all set to go. So Tunde, thank you for accepting our invite. Like we said, I'll just have you introduce yourself in just say a minute, and then we can take it from there. Just maybe tell us who you are and maybe what you do, and then we'll take it from there. I've already given a sneak preview of your profile, but we hear from you now.
Okay. Who am I? My name is Olatunde Amolegbe. A stockbroker, an investment manager, corporate banker. I've been practicing stockbroking and investment management, asset management in Nigeria for, I think, aggregate 30 years or thereabout now.
30 years.
Yeah, thereabout. So in various roles, various aspects of the business, of investments and securities management, virtually all the aspects actually. And so presently, I'm managing director, CEO of a securities firm that is a leading member firm of the Nigerian Stock Exchange, and that also deals in the four other securities exchanges we have in Nigeria. And I'm also serving at the moment as the president, chairman of council of the Chartered Institute of Stockbrokers. That is the institute responsible for training and certifying all securities and investment professionals that are practicing and wish to practice in Nigeria. So I think that's about it.
Okay, Tunde. So welcome again to the Spaces. So I'm going to have to speak up a bit if you don't mind, so we can just all grab you and hear you. Thank you again for joining us. So I hear you say you're the MD of your own private firm, but you're also the president of the Chartered Institute of Stockbrokers. So let's start from the Chartered Institute of Stockbrokers. How is the profession of stockbroking now? Is this still a profession that I should, if I'm an 18-year-old kid in university, should I still want to be a stockbroker? And I asked because of all these fintech apps. Now I can buy a stock from my phone. Why do I need a stockbroker, and why should I become a stockbroker?
Okay. Yes, good question. The fact is that stockbroking now isn't what it used to be. As you agree, 10 years ago, 15 years ago, to buy security in any security of any kind, you would need to actually go directly through a stockbroker. But now, you would do the trading by yourself via all these apps and all these tech companies, that do not require you to trade by third party. You can do your trading there yourself. But of course, what that also means is that it only just gets to emphasize the other aspects of the stockbroking profession, which people didn't pay too much of an attention to.
Okay.
I will put it this way: stockbroking has never been about just taking orders and executing trades for people on the floor. Okay, stockbroking basically is about research and analysis, being able to figure out which securities offer intrinsic values that are better than what the market presents, presenting those research in a way that clients can assimilate them. All right, then taking the client's orders to the market. It is also portfolio management, managing monies for people that are not able to deliver themselves, either on a discretionary basis or on a non-discretionary basis. All right. It is also financial planning. It is wealth management. All right. So various aspects for that business. All right. Beyond just taking orders and executing those orders. All right. So when people get stockbroking, all right, the tendency is just to think, the stockbroker is just somebody that give my orders to put it into the market and execute it for me. No, it goes well beyond that. All right, so that aspect of execution is basically what the fintech and the trading platforms have taken over. And I mean, and it's only right, that happens. For the aspect about financial advice, investment management, portfolio management, research and recommendation, that aspect of the business is now where the emphasis is, and that is where you need expertise.
Okay.
All right, and that is where the expertise of the stockbrokers now come to play. All right, yes, I can have an app on my phone that enables me to trade in New York, and enable me to trade in Nigeria, enable me to trade in Hong Kong. But what do I buy?
Yeah.
All right. Now my option is to just go on Google and or go to Yahoo Finance and just take the generic research that they put up there. All right. My other option is also to have a stockbroker who could actually advise me as to what to buy and what to sell, when to buy and when to sell. All right. And then of course also get a portfolio manager who actually manage my money for me and ensures that I is able to deliver returns that fits the market for me.
Gotcha. I think Tunde, well answered, Tunde. But let me also press you just a bit, right? There's an app that I use and it's Nigerian. I don't really name the app. It allows me to do my asset allocation. It allows me trade. It gives me a balance sheet. It gives me a report. I just look at it on the phone. I can trade as low as I think 1,000 naira or so. So apart from the human angle, which I hear you say, that I'm talking to a human broker, he's helping me and guiding me. I'm just saying, is there any other thing? Do you think stockbroking now is going to be like maybe airlines, like booking office for airlines, travel agencies, where for now nobody goes to a travel agent, you just go online and buy your ticket? Or is there that extra value that you can really? I mean, all your answers have been excellent. I like them. Is there an extra value that we're going to get now from a physical human stockbroker? I mean, there are algorithms now. There are some that are fake. We're going to talk about that. Some are real. But yeah, but I'm just thinking, getting your view, just to press you more on that.
Yeah. So what happens, I think, is that maybe you will not get to talk to your broker on a one-on-one basis. The truth is that what I actually also see going on is that the business of stockbroking will even move away from one-on-one contacts.
Okay.
Such that the work of the stockbrokers would also be such that they do their research, all right, they make their recommendation and they commercialize it. They put it on platforms such that a large number of people could access them. All right, so they make money. They make money from how many people are able to access those recommendations. All right, and how many people are able to benefit from it. Of course, they will also make money from continually also managing funds for people. All right. So I mean, for instance, you have 10 million naira. You don't want to you don't want to go through the struggle of managing it yourself.
Mm.
But you have a desired return of say for argument's sake, 15% on that 10 million. All right. You will be able to say to a stockbroker, okay, look, 10 million naira, my desired return is 15%. All right.
Yeah.
If you deliver 15%, you get your regulated fee. What you are supposed to typically pay.
Okay.
0.5%, 0.2%, whatever it is. All right. Now, if you are able to beat that my expected return, you now get an incentive.
Oh.
So I'm expecting 15%, about 20%. The extra return you deliver, you could now take 30% of that. You could take 20% of that, and that is where the money is. All right, that is where. So you have given the stockbroker an incentive to want to work hard to ensure that it beats your return, your desired return, because then he now gets to make more money than he would typically make from the normal fee you will earn for managing money for you. You know what I mean?
Yeah, I get that. So more
that's where the money is.
got you, like a hedge fund. So the extra return, the incentive is then like what the brokers can do that the apps really can't do for now. The apps are more like execution and all that.
Absolutely. Yeah, exactly. Because the app are there, they will make recommendations, and then you can't really you can't really challenge the app to say, okay, look for me. All right, and if you do this, then this, no.
Perfect.
That you can really do, on a one-on-one with the stockbroker.
Excellent. I hear you. So let's go to the next question I've been getting every day now. Is it possible for a computer? I know computer algorithms exist that allow people to trade, but I see lots of them. There's a particular one, and I'll actually mention the name. It's called Prime Capital. That's a Ponzi scheme right there. If you just Google it, the folks there are fake. It's a fake account with actors acting as stockbrokers, and they are promising people 15%. If you invest, that the stock will trade and all that. That particular one, Intelligence Prime Capital, that's a Ponzi scheme, straight up. But is it possible for a broker to use a computer and trade and guarantee a result? I mean, is it possible and is it allowable under the CIS, Strategy of Stockbrokers Code of Conduct?
Okay, let me just say to you, right away. The reason why an investor will talk to a stockbroker rather than just pick up an app and put on their own is because they are looking for protection. All right?
Yeah.
Because they are looking for the protection that is offered by a regulated market.
Okay.
All right? I mean, otherwise, just download an app and do whatever you want to do. And if you happen to make money, good for you. But if you happen to lose your money, there's nowhere for you to run to. All right, because you know you are playing in an unregulated environment. So the only reason why you will go to a stockbroker in the first place is because you want to enjoy the protection that comes with playing in a regulated environment. An environment that is regulated by the type of the trading platform on which you are trading, the stock exchange and all of that. That is regulated by the SEC, for instance,
yes,
and that is regulated by bodies such as CIS, which are here. All right. So, for instance, in Nigeria, it is codified in our law, both in the laws of the SEC and the laws of the CIS, that a stockbroker cannot guarantee returns to anybody.
Can you please say that again so that we for the guys at the back?
So it is codified in the laws of the CIS and the SEC, and by the SEC, I mean the Securities and Exchange Commission in Nigeria. There, that a stockbroker cannot guarantee return for an investor. All right, I cannot take your money and say to you that I'm going to give you 20% and guarantee you 20% return. So that is a red flag out there, right there.
Yeah.
So if you go online and someone is saying, bring me your money in 6 months' time, I'm going to give you 30%. You know that person is not operating in a regulated environment. if you choose to go with the person, you know that if you lose your money, there's nobody you can go to go and report the person.
Good point. Good point today. Thank you for saying that. Yeah.
Yeah, that is a guaranteed red flag that everybody can look for. All right, the moment anybody is guaranteeing you any return, you know that that person is not operating guarantee. All right, so what the stockbroker can say to you, for instance, is to say, look, I will make an effort to deliver a returns that beats a particular index. All right. So for instance, you give me money, manage money for me. I will aim, for instance, to deliver a returns that matches the all-share index of the Nigerian Stock Exchange, for instance. Or I will make an effort to deliver a returns that is similar to the Dow Jones 500 index, for instance, or the New York Stock Exchange index, for instance. That's what the stockbroker will say. The stockbroker will, because I mean, they are not stood there. They never know what will happen. We all know what happens what would happen that would make the projection of a company change. And we know the various indices that affect share prices. A company could be doing very well, and then some macroeconomic events or socio-economic events happen. And before you know it, it's not that you expect that you will deliver 20% return, will be delivering negative result for the year, which is the reason why stockbrokers are not allowed to guarantee returns to anybody. So anybody guaranteeing returns, you have to look at the person with suspicion. All right. So that is so it's there in our law. It's there in the laws of the SEC for there not to be a guarantee of return. You can only aim to beat an agreed index. An agreed index between you and the stockbroker. You can aim to beat that. All right. And if you beat that, then you can get an incentive. Beyond that, there's no guarantee of return. That's as much as I can say regarding that.
On that, so clearly that answers that very, very big question about stock investment that are saying I will pay you 10% every 2 weeks. That answers that question. That is clearly not a regulated provider of financial services. But to the question about, so does that answer the question about algorithms, i.e., that can I use a robot and generate consistent results going forward? Or where do robots come into play in this new digital online world? Can I program a robot to trade like Tunde and make money?
You know what algos do is to cut the data. All right. What brokers do that in a smaller way. That those are people that you call people trading with technical analysis. All right. So algos are just taking technical analysis to the higher level by working with a larger set of data, if you will, because they are machine and they can do that. So they can crunch numbers, look at patterns, and on the back of patterns, try to put your money in, all right, and try to make returns based on patterns. But the problem is that patterns and algos do not respond to unexpected events.
Like a black swan.
Like war breaking out. Do you understand what I'm saying? Because the data that is being read, for instance, for Coca-Cola shares, for instance, the data is reading the fact that, okay, look, maybe 2 years ago or 3 years ago, as at 11th of March, the share price of Coca-Cola was this. And as at 11th of March in 2010, the shares of Coca-Cola was this. So we are predicting that as at the 11th of March 2022, the share price of Coca-Cola is going to be this. So, and if the price presently in the market is below that price, the algo can put you in that stock in the hope that the stock market has memory, that it will remember, that the stock market will remember that as at the 11th March or so date, the share price of Coca-Cola was this price. And that the market will remember to take the stock to that price so that you can make money. But the only problem is that it might forget the fact that inflation is now what we are all having to contend with as at 11th of March in all over the world globally. All right, and we are contending with war in Ukraine and all of that. So
Yeah.
while households do a good job of analyzing big data and using that information gotten from big data to help people trade, what it does not do is to factor in fundamental analysis. And fundamental analysis is the bedrock of any trading that anybody wants to do, because that is what first of all establishes the basic facts about the situation of an economy, about the situation of the global economy, then about the situation of the company you are talking about, before you can now start talking about data. All right, so that for me is the downside of data of algo, which basic human interaction takes care of, because before a stockbroker puts you in stock, you must have done this basic fundamental analysis and establish the fact that the intrinsic value of the stock is trying to put you in is below what the price should be selling at before you can now start talking about crunching data. All right. So we will always need. I think that we will always need that human element. It cannot be removed from it 100%.
So essentially, it's a function of the data that you feed into that algorithm that can give you the results. If I had fed in results, of course, I did not see Ukraine war coming, and Ukraine war has now come. So that means the algo is going to be off.
It's just going on its own based on the data that is there.
Yeah.
Not realizing what has happened now that have changed the fundamentals.
Correct.
And how we continue to look at the data, without necessarily taking cognizance of the fundamentals that might be changing more rapidly than the data is saying. All right.
So just to word out there that essentially it's how good the data is, how good the information and research is, and how quickly the algo can learn teach itself to. As a matter of fact, without the fundamentals, even if it can teach itself, if it does not understand that Russia, Putin, oil price, it's difficult to feed all that into a computer. You can't feed how I think.
Absolutely. Or how people are reacting to a particular situation at any particular point in time. All right. Algo comes based on the data you feed in.
Yeah.
Meanwhile, the market most times act on a real-time basis. You understand what I'm saying? If, for instance, oil prices go from $70 to $180, an efficient market in an oil-producing country will react to that instantly. It will not wait until the data is still fed into algo. All right? The market will react immediately based on the fundamental of the fact that revenue for that particular country is meant to rise. All right, so it will not wait until the data is built into algo and then it takes as the case may be. Not to say that algo isn't good, but at the end of the day, the fundamentals is really what will enable you to deliver superior results.
Okay, great. Let's move on again just one more time to the industry. How is the stockbroking industry right now? How is it doing? I know in America we have this Wall Street bets, folks that are essentially now acting as a third force in the market. Usually, when you have a stock that is placed on, say, bid, which means the stock is supposed to go down in price. Over there in the US, those guys in Wall Street bets, those young boys on the apps, basically come in and scoop up the shares. Hertz was bankrupt, and those boys went in there and were buying a bankrupt stock, and the stock was moving up in price. Unbelievable. Do we have that in Nigeria? Is that a third? Yeah. AMC, all those are dead companies, literally, but they moved the price up and saved some. But they are essentially dead shells because the business case to short was correct. Do we have such in Nigeria? I mean, Nigeria seems to me like a very, very elitist market where you have to know what you are doing before you can buy stocks. The stock markets, people talk to me, they get scared. Oh, how can I even start? Is there anything like that? Have you seen anything like that of a third force in the market where people have their own separate way, apart from the apps, but just the way? Do you see that? How is the industry going? Is this an elitist, big boy only setup?
Let me just say this. You know, firstly, we do not have forces in Nigeria yet. All right, and we don't have it because most of the investors here, I would say, are still a lot more cautious with their money than maybe people abroad. You know that here there's not much of a safety net, if you will. And I will make both to say that money isn't cheap to come by here. Look at the interest rates here in the region of 18-19%. In developed countries, you probably be able to borrow at 2% or 3%. All right? So the lower the interest rate, cheaper the money, if you will. The cheaper the money, the more I will argue that the easier it is for you to take a risk with that money. All right? Because it's not expensive. If you are borrowing money at 2-3%, all right, you would argue that, well, I can afford to lose it. All right, and maybe find a way of making it back and all of that. And
I see your point.
And what happened regarding situations where when the fundamental of a particular stock is pointing in a certain direction, but you now have situations where people now choose to reverse what the situation of the stock, contrary to what the fundamental is saying. It's easier to do in developed economics where money is cheap. All right, don't get me wrong. They are still taking significant risks. All right, they are taking significant risks, because at the point at which for instance, a company is in a position because fundamentally business is not sustainable, and yet choose to put money in it and prevent it from going its natural way. Green stock, for instance.
Yeah.
You mentioned. The problem with the company is a problem with the fundamental of the business itself.
That's correct.
If you are talking about a company selling physical hardware in an environment where business has moved online and has not been able to reinvent itself such that it is able to compete in that space. All right, and then you now have some people who really aren't looking at the fact that the way this company is really doing business is not sustainable. Yes, they are still buying the share. What are they saying? They are saying, look, we are still ready to continue. So essentially, they are dealing in a share. They are dealing in a share. That stock that they are buying is not backed by anything. They are certainly not going to be expecting any dividend from that company. You understand? The company should very well file for Chapter 11 anytime from now, and if you are buying the shares.
Which is what they are doing. Yeah, and and they will point to you that they are making money off it, and they are right. That's the irony of the whole thing, because those Hertz shares made a profit. The bankrupt shares made a profit. They bought bankrupt shares and they sold them higher at a profit.
Yes, but the way for the stock market is that it will still find its level one way or the other, because what will happen is that some people will ultimately get stock. Some people bought it for them. They bought it. All right? They sold it at a profit. Some people are holding those positions in their books. All right? Those people holding it in their books too. The only way they will also get profits from it is for them to also be able to put it onto someone else.
That is true.
Ultimately, someone will get stuck with it. Ultimately, someone will get stuck with it. So
yeah.
The question is that you do not want to be the one that gets stuck with it.
Exactly.
You do not want, because there's nothing of that feeling is done. It's done. That what they are doing, it goes contrary to the natural order. Let me tell you, one of the most important function of the stock market is efficient capital allocation. And I will explain what I mean by that. The stock market is there to ensure that the companies with the best business model, the companies that has the best chance of being profitable, the companies that have the best chance of adding value, get the best type of capital. And what is the best type of capital? The cheapest form of capital. Alright? Now those companies that do not have good business model, those companies whose times are past, the stock market is there to push them out and enable others to come in. What these guys are doing is to turn that basic concept, that basic economic concept on the head, to say, yes, we know that the stock market is there to allocate capital efficiently, but to weed out laggards and non-performers. But you know what? We are not going to allow the stock market to do that. We are going to say, if the stock market is saying this company is something the number should do better, we are not going to allow it by using our money to prop that company up.
That is true.
Even when we know that company should be weeded out, and economics says that company should be weeded out, no, we will not allow it. We will continue to use our money to prop it up. It's not sustainable.
Yeah, that is you're creating a zombie company more or less. Just keep it. Yeah.
It's just not sustainable.
Gotcha.
At some point, the company itself will either fold up or file for chapter 11. And at that point, the people that are holding the shares, what will they be holding at that point? Nothing. They will be holding virtually nothing. So we are now talking of people trading on paper, really. Trading on plain paper that has no value. And the essence of the stock market is for people to trade on paper that actually has value. That is the essence of the stock market.
So then I'm going to ask you two quick questions I've got on my DM. Then we're going to go back and talk about the career path if I want to be a stockbroker. So someone is asking you, wants to remain anonymous, that last year she got 11% return on her portfolio, on her equity portfolio from her manager. So she wants to know if the manager did a good job at 11% for the year 2021. If the manager returned 11%, did he do a good job?
Okay, well, the way I'll answer that question is depends on what your expectation is at the beginning of the year when you added the portfolio over to the manager. What was your expectation? What did you discuss with the manager? What was your agreed benchmark in terms of return? All right. If you did not have that conversation with the manager, you go ahead and just manage this portfolio from here. Let's see how you do. Then the second way is for you to now look at the market in which that portfolio was invested. I don't know whether it was in Nigeria or whether it was
in Nigeria. She invested in the Nigerian stock exchange, yeah. And
if it's in Nigeria, you can take any of. We have like almost 10 indices, serious indices for which you can benchmark your portfolio. Alright, so assuming you benchmark your portfolio against the broad index, which is Austria index. The Austria index last year returned 6%. That is the broad index that covers all stocks listed on Nigerian stock exchange. It returned 6% last year. So if your portfolio manager returned 11%, that means that your portfolio manager has performed the Austria index. So it can be said that they have done well. All right. But within Nigeria, there were other indices that did best. So like the Austria growth, all the Austria growth index, which is made up of companies that are considered growth companies. That index produced 28% last year. 28%. So if you compare your return to that particular more narrow, a narrower index, growth index.
Yeah.
You can argue that maybe they are not perform.
Yeah, she just sent me a text that the benchmark agreed was just the broad NSC all share index, the broad index.
And the guy almost outperformed the index by the broad index by 200%. It's not very well.
So it's done very well. And she's been an Oliver Twist. She's asking, what about for the Sharia compliant portfolio? I don't know if you have an answer. She made 8% on the Sharia. I think that's what with Lotus, the ethical portfolio. I don't know if you have that figure offhand. It's also.
I know there's the NSP last weekend.
Mm-hmm.
I do not know what that is on last.
Gotcha.
But I'm sure it's supposed to be the NSP. To be able to see what that from last year, be able to compare to your portfolio and be able to use that as the dominance of your portfolio management.
So, in essence, what I hear you saying today is this: that when you go to a stockbroker or even to an app, you want to have a benchmark return in mind. And that benchmark return at the very beginning is what you want to now use to judge your broker at the end, more or less. You have to have that discussion with them.
Absolutely.
Excellent.
My expectation is that at the very least, I expect it to be the OCI index for it.
Okay.
Or I expect it to be the allowed index for it.
And to be clear, what's the all share index? What does it mean?
The all-share index is the index that aggregates the performance of all the stocks in the market.
Okay.
All the stocks put together in the market. So, for instance, in Nigeria, I think we have close to 400 companies listed.
Okay.
So, the performance of the price movement, the price performance of all the stocks throughout the year is what is calculated as the NSC index.
More or less the average.
More or less the average. So some of the stocks will have gained in the year. Some will have lost. So by the time you aggregate everything, that is what is considered the NSC
index. So the broker should at least beat the average now. He should at least return more than that average at the minimum.
Yeah, because if the broker does not build that, it does not beat that average, and that is not very good. Why? Because if at that point, if the broker cannot beat that average, what do you need that broker? Because you can actually buy, you can actually buy exchange traded funds. Exchange traded funds are funds made up of funds that are designed to mirror the external, the entire exchange. So they are made up of stocks that constitute all the sectors in the exchange. So those funds will typically mirror the NSC of that. Without even anybody doing anything with them. Without anybody having to make any effort. Because they are constituted of all the stocks in the various sectors of the exchange. So you as an investor might as well put money in those ETFs. So you buy money in this, put money in this ETF. If what you are expecting is just NSC share,
yeah.
So your broker have to be able to beat the NSC or share at the very minimum. Otherwise, you might as well just use your money to buy the ETFs.
All right, Tunde, thanks for that. I mean, if you're just joining to listen, we're having a chat with Tunde Amolegbe. He's the president of the Chartered Institute of Stockbrokers and also the MD of Arthur Stevens Asset Management, an investment and stockbroking firm based out of Lagos. And he's just walking us through the industry, stockbroking. We're asking about the stockbroking in Nigeria in general. But in the second question on DM, someone is asking you that, okay, that if the company gains or loses money, does the value, so let me read this question, does a company gain or lose value when the value of their stocks go up and down? So if Dangote shares go up and down, does Dangote get money or lose money? That's what it's asking. That's from Dave Israel.
Dangote loses or gains money. Alright, so its paper value for that day goes up when the share price goes up. Alright, so I'll give you a practical example. Let's say Dangote Stanet has 10 million shares in this. in total. And Alhaji Dangote has 8 million of those shares as his own. And he has put 2 million of those shares to the company you and I buy. Alright, so every day the share price goes up. Alright, so as we think the Dangote cement was listed at 10 naira.
Yeah.
And Alhaji Dangote is holding 8 million shares. That means on the day of the listing, the value of the shares is 80 million naira. But it happens that the following day, the share price goes to 11 naira.
Yeah.
Okay? That means the paper value of the shares goes to what? 88 million naira.
Yeah.
So every day the price goes up and down. The paper value of the shares continues to also go up and down.
Gotcha.
And I'm saying paper value because supposing that it's not selling.
Okay.
It's not going to sell.
Not realized.
It's not going to sell. So yeah, it gets, so I would say it makes money, but it makes nominal money because the paper value of his shareholding goes up and down. And that is why, when Forbes is doing the evaluation of the richest man in Africa, for instance, they take the value of the shares, of Dangote shares and Femi regular shares and that shares and all of that, and they value them at a particular point in time, and be able to use this, and they will be able to use it to say, yes, as of today, Dangote is worth $35 billion. It does not mean that Dangote has $25 billion cash out. No. It means the paper value of this investment based on the value of the stock on the stock market is worth $25 billion as at that date.
Correct.
All right? Yeah.
Okay, excellent. So let's go the different track now. Let's talk about careers in stockbroking. A long time ago, I watched that movie Wall Street, and I wanted to just be an investment banker or stockbroker. I didn't know what it actually meant, but I wanted to be that person I saw in that movie. If I'm an 18-year-old kid in Nigeria, what can I do if I want to become a stockbroker? What's the pathway now? So I'm just a fresh guy. I'm in university. Do I have to finish university? Or can I go to CIS without going to university? Can you just give us a pathway from an 18-year-old to becoming a chartered stockbroker that I can trade and all that kind of stuff? Yeah.
For an 18-year-old to be a chartered stockbroker, you need to be a university graduate.
So I have to go to university, a BSc.
Get a BSc.
Not HND.
No, HND is there's equivalency now in Nigeria.
Okay.
There's equivalency, so if you have an HND and then you have to consider that they are the same level grade. All right?
Okay.
So after that, you go to the chartered stockbroker, you go to the website to register as a student. All right? So to register as a student, start taking exams. The exams are still at new level now. Level 1, which take you about 6 months to do. All right. After the level 1, you pass all the papers in level 1, take level 2. That should probably take another 6 months or thereabouts. And if you pass the level 2, you become the graduate member of the institute, and then you get inducted as a chartered stockbroker.
Okay.
Now you will be inducted as an omnibus stockbroker. Now, what do I mean by omnibus stockbroker? It means a stockbroker that is able to carry out all the functions that is classified under that you are able to protect their needs.
Yeah.
Portfolio management.
Oh, okay.
You are able to do financial planning, all the you are able to trade in derivatives. You are able to trade in commodities. All right, the whole activities you are able to do. All right, okay. Now we don't realize that this part of this world, most people aren't willing to have to wait for one year or one in order to become a chartered stockbroker. So what the institute has done was to was to say, okay, look, we can now interested in coming into this industry, now specialize. All right, so we now have specialization. That as a young person, you don't want to be omnibus, you don't want to be you don't want the ability to have all this. All you are interested in is to be able to create a create and manage portfolios of businesses, for instance. All right, we're now allowing you to register and qualify to be an equity specialist. That you can do with this month. Right?
Oh.
Yeah, that you can do. So you now want to become a commodity trader specialist. You can register, do the exams and qualify within 6 months. You want to register to just be an investment manager, a specialist in investment management. You can do that for alright. So that way you don't have to be a stockbroker. But after this specialization, if you finish that in 6 months, you can naturally start practicing with that license. Then after, when you start practicing, if you feel that there are other aspects of the business you want to do, like to practice, then you can now start taking that, stage by stage until you are able to, complete the
omnibus license.
License.
So I would like to clarify. So if I get in as an 18-year-old as a student, do I do these exams when I have graduated my BSc, or can I take these exams in my year 1, year 2? Do I have to graduate first?
There is also a part. There's a second part also that is undergraduate.
Okay.
In school. All right. We would also actually start off with our diploma program. We have a diploma program that is targeted strictly at undergraduates. You can register for that diploma program. That way, while even from their 100 level or 200 level, they can actually start taking that exams on the diploma program, such that by the time they finish school, by the time they finish university, they most likely have finished the diploma program.
Mm-hmm.
Once the advantage that finishing the diploma program is clear is that it enables them to speak level 1 examination when they now finish. Alright, so they speak the entire level 1 and go straight to level 2, which they can now finish in the next month. Alright, and when they finish after they finish school and they go straight to level 2, finish that within 6 months and they become an omnibus stockbroker. Alright, so present undergraduates that are in school can start with the diploma program, start doing that.
Okay.
They finish that, they pass, and the time frame takes them to become an omnibus stockbroker after they finish school is now 6 months rather than 12 months or 18 months as they say.
Excellent. So that's just like a pathway for students. So if you're in university, you can get that diploma, keep yourself warm, then do the 6 months to go. So, and I like the fact, I didn't know that we had these specializations to commodities, investment managers in the CIS. So I can basically get that, and I specialize in that, just like a doctor specializes in, say, oncology or pediatrics. Okay.
Just become a specialist in that, and that's what you do.
Okay.
With that qualification, you'll be given permission to trade on the specific exchanges for which you have qualification. So, for instance, if you're an equity specialist, you'll be allowed to trade on equities on the Nigerian stock exchange. If you are a commodity specialist, you'll be allowed to trade on commodities on the Lagos Commodity Exchange or African Commodity Exchange that is based in Lagos and that is based in Abuja, and like that,
Okay, so then someone is asking me, Femi is asking me, right? Is the stockbroking license, the exam or certification, is it only recognized in Nigeria or is it recognized outside Nigeria? And if it is, which country, if it is?
Okay. The CIS has a partnership with DC UK. DC UK is the Chartered Institute and Investment. That is the certified body for investment professionals in the UK. So if you are a CIS by PI qualified stockbroker. Just need to take maybe one or two things in CCUK, then you get CUK certification along with the Taka in Nigeria. That way, you could actually also practice as a stockbroker in the state of London.
Wow.
And also, yeah. So,
Tunde, could you just say that again, just in case people are just didn't follow? Just give us the exact title so I could tweet it out. So you say that again, please. So if you do what?
So we have a partnership with DCUK. DCUK is Standard Institute of Securities and Investment UK. All right, that is the body standard UK. All right, in all of the United Kingdom to certify investment and security professional. All right, so if you obtain our certification in Nigeria, you just get to take one of it, and then you get certification with CCUK. And with the CCUK, you can practice at Qatar Broker, City of London. All right. Okay, so without our certification, you probably have that much of having to take their exam in a year or one. But with our own certification, you just have to do, and that will continue within 3 months, and you get the certification for CCUK. All right, along with our certification, because they give you with our certification, you get the different amount of exemption. All right.
Yeah.
For the exam, for their own examination, in order to get their own qualifications too.
I like that, Tunde. I really like that because that means this is quote unquote in a way it reduces your time, cost, and you're on a pathway. If you are emigrating, you're on a pathway towards becoming, say, a quantity trader and all that stuff. I like it. I'm going to hit you up if you can give me the links maybe after this so I can share. I wanted lots of students to tune in because I think stockbroking I like it because you can do it on your own. Like, if you are chartered and you can open up your own little office and just manage people in your church or your mosque or your association and just become their stockbroker. It's a way of, it's your own business. It's a business you can do on your own or also work with somebody. So I do like it. I'll hit you up definitely once this is over. But I have more questions for you today. People are sending me DMs. I'm just going to read them if I ask you mine. He's asking here, in terms of this is I think I answered myself. He says, if I have a license, this is from Andre. If I have a license and I'm chartered with the brokers, do I need a SEC license again to open up my own personal stockbroking office? He's saying that if I have CIS certification and I'm a chartered stockbroker, can I just open an office and say, hey, come and buy and sell stocks from me to the exchange? Do I need a SEC license to do that?
Now, to practice as a stockbroker, you will need to be affiliated or employed by company, right? All right. Now there is a second model that we call a stockbroker model.
Stockbroker
model. What that means is that I started as a licensed stockbroker. I can open my own office, have my own portfolio of my specialty, as you have first, have my own clients that I'm managing. All right, but I have to move their trade through the platform of a GD member firm that is licensed by them. All right, so I identify the payment that is certified by state. All right, certified by the payment platform. So I'm sitting somewhere and do it. All right, and I have a portfolio of clients who are open for my platform. All right, so they get money. All right.
I'm so sorry, you're breaking up just a bit. If you could maybe speak up or move your location just so we can get a proper recording. You're breaking up just a bit. So if you just pick up a bit or just change direction, yeah, I think you're breaking up. Okay, go ahead, sir. If you could start from the top, just because you're talking about stockbrokers, just so we all get the point you're making. Yes, thank you.
Okay, so is it clear now?
Yes, and if you just speak up a bit, thank you so much.
All right. Okay, so I'm trying to describe now. Typically, as a chartered stockbroker, you are to practice. You are supposed to be employed by dealing member firm. That is a company that is licensed by the different platforms and registered by SEC. All right, to carry out the business of stockbroking. So as a chartered stockbroker, you deal through that firm. All right. Now, as an individual stockbroker, the way you can do it without necessarily being employed by a dealing member firm is for you to have an arrangement with a dealing member firm, such as living asset management, for instance. We're a dealing member firm, we are registered with most of the trading platforms, and we are registered by SEC. All right. So, for instance, say Kalu is a chartered stockbroker who is sitting somewhere in America and has a portfolio of clients, all right, who he wants to deal for, all right, and who he wants to manage portfolio for, all right. So he's managing a portfolio using the various technology and various platforms he has. For the trades he wants to do, he will need to route these trades through the platform of the network. All right. So, and as he's doing that, he's earning his commission. Of course, he has already negotiated an arrangement with Dr. Stevens to say, okay, look, for every trade I route through you guys, I get this, I get that. So he routes to trade through the platform, of the dealing member firm to get executed. So it is executed and then it is reflected in his account right there and there. All right. Okay. So for instance, for now, a chartered stockbroker cannot route trade directly onto the platform by themselves. They have to do trades through the platform of a licensed dealing member firm. All right.
Yeah.
I hope that answers that question.
Yes. So that means that like you use example, if I become a sub broker, I can manage my own clients, but I trade through you. You do all my trade, but I manage them and I share the profit share, or you pay me a fee. So in essence, to know what you're saying is that I can become my own boss. If I am in a city like, say, in my village like Abia, in my village in Abia or Hafia, I can open up Carlos stock broker in Hafia, and I can take trades from my villagers or my guys in my village, and I'll route them through you, get my people involved in the stock market, and become my own boss. I can do this really anywhere in Nigeria as long as I'm qualified to.
Yeah. Okay. That's exactly the way it is. So you can open your own small office, be doing your own thing, through your trade, through your stockbroking firm, and then continue to earn your fees.
Okay, Tony, I love that. So Agbe Jimmy is asking, right? How long will it take, right, to finish the diploma for an undergraduate? Maybe he missed that, and then it's doing a follow up as well. That if it's a final year undergrad, should he basically just wait and finish his BSc and start the program from scratch, or should he take that diploma? He basically wants to know if he should take the diploma now from final year, or just wait and do it. Maybe how long that diploma takes, more or less.
It depends on which discipline you are studying. If you are studying discipline, say in maybe accounting or business or something like that, if you finish your degree, you are likely to get some exceptions when you register to do your charter. And those exceptions mean that you can finish your charter quicker than normal. All right. So, but if you are not doing any of those disciplines that are related to finance or related to accounting, I will advise that you start the diploma. Typically, yeah, depending on how serious or how smart one is. I will assume that one should be able to finish the diplomas in 1 year to 1.5 years. And with the diploma in your pocket, you get exempted for a whole stage 1. So you go straight to stage 2. And with stage 2, depending on how smart you are, you can finish it in 6 months and get your charter.
Okay. Yeah.
Alright, so For me, my preference is that undergraduates go and register for the diploma.
Yeah.
What the diploma does actually gets you set, gets you ready. You already know the pattern, you know what is expected of you. So by the time you actually started doing by the time you start doing the stages, well, you are already familiar with what the whole institute and this examination is all about. So my advice is, if you are an undergraduate, register for the diploma and start taking it. And become just generally become familiar with the institute and the way things there.
So I think this is very, very important for us to get out there. There are many Nigerian kids that are just looking for a pathway. They know that the job opportunities now are very, very limited. So anything that gives them a chance to be trained and become their own boss. Most of them are already marketing, but they now get trained to imagine they are selling bonds, savings bonds, but they are sending it through you, which is a legal way to do that. I think it's a big opportunity for people to learn skills and also build out income. So I'm definitely going to get back to you. If you have it now, you can send to me. I'm getting a lot of DMs on this same question of broker students. So I'm just going to actually, if you send to me, I'll forward. So any questions on that, don't worry, guys. I'll get information from Tunde, and I'll make sure I share it during the week on how you can become a stockbroker, the steps as a student. I'll make sure I get that from Tunde and share. So no need to. I'll make sure I get it from him today. So somebody is asking again, right? Just to take us back to this to stockbroking industry. I have a full hour which I'm going to ask you now about investing in stocks. But I also want to clear this last part with the strategy of stockbrokers. If a stockbroker has an issue with a customer, maybe there's a dispute. What's the dispute resolution process? And do you sanction stockbrokers? I mean, is there like a list I can go into and look and see that is sanctioned stockbrokers, so I shouldn't deal with them? And what are the discipline and enforcement procedures in the stock market that I should keep stockbrokers, legal and ethical, and of course, acting as fiduciaries?
Excellent. The essence of having a regulated market is to ensure that investors are properly protected at all times. That's the essence of the regulated market. Otherwise, we all just go online and be doing whatever we like, and if someone hurts away with our money, we just take it as a loss and just write it off. All right. But the essence of the regulated market is such that you know you are dealing with, you know if they mess up, there's a consequence. Also, the intermediaries, the stockbrokers themselves, knows that they can have to mess up because there are various bodies to deal with them if they do mess up. Okay, so for instance, if you have a dispute with a stockbroking firm, for instance, all right. Typically, what you should do is to write a letter to that firm saying, okay, look, I have an issue with you and all of that. Okay, and now the rule says that stockbroking firm is meant to resolve that issue within a particular time period. All right. If that time period passes and that dispute isn't resolved to your satisfaction, then you have an opportunity to take that dispute to the respective self-regulatory organizations that stockbroking firm has. So those are called SROs. So who are these SROs? SROs are essentially three groups. Associations formed by various participants in the market. So if, for instance, the problem you have is with the stockbroking firm, there is an association of securities and securities dealing firm. All right, you can write to that group to say, look, I have so and so problem with so and so stockbroking firm. I want you guys to look into it for me. All right. They are also given a particular time frame within which they are supposed to resolve that issue. If, for argument's sake, it's still not resolved to your satisfaction, you can now escalate that matter to the platform upon which the trade was done. Okay, so for instance, if the trade was done for you on the Nigerian Stock Exchange, at that point, you can now write to the stock exchange to say, so and so trade was done for me by so and so house and by so and so stockbroker or so and so thing, I'm not happy with it because of this and this and this. Alright? That platform is now supposed to weigh into it, alright, and try and resolve it for you. Now, those platforms actually have punitive measure, which can be very, very painful, which they can visit on the firm. In case the firm refuses to, resolve the problem in a timely manner. So, for instance, a stockbroking firm who gets a matter escalated to the stock exchange, all right, and the problem is not resolved, the stock exchange can still resolve this thing within 2 weeks. If they don't resolve it within that 2 weeks, that firm can get suspended from trading. And if a firm is suspended from trading, it means that in that period of suspension, all right, they don't get to trade, they don't make any money. All right. The firm, all right, could also be levied from every financial penalty. All right. I know some firms that have been levied penalty of as much as 10 million naira, 20 million naira recently. All right. So so you find that most firms any matter they have to get to the point where it gets to the point where they get their license gets suspended or they get or they get fined financially. If that does not work, there is now the final level of resolution, which is the SEC. If the matter gets to the point of getting reported to the SEC, and the SEC still say resolved and it's not resolved, then the SEC now has power to actually withdraw the license of the firm. So actually withdraw. So you can see those various levels of resolution, right? And I mean, most and what we find most times is that before these issues ever get to those levels, more often than not, the firm will have found a way of resolving the issue.
Okay.
Right? Now, if the issue you have is not with the firm, but with an individual professional, an individual stockbroker, all right, and that is where the advantage of CIS comes in, all right, where we have a situation where people are running schemes, people are running Ponzi schemes on the internet and all over the place, and they are not registered with any platform. They are not registered with SEC, all right. So you cannot talk about withdrawing the license from them when they never collected the license from anybody in the first place. They are not registered with SEC. So there's nothing to be taken away. If the problem now comes an individual stockbroker, for instance, a stockbroker takes money from somebody to buy shares for the person and refuses to buy the shares or runs away with the money, you can now report that individual stockbroker to the Central Institute of Stockbroker. All right.
That makes sense.
We have an investigative panel that will investigate the matter, and if it is found that that matter is one that is so serious that we need to do something about it, they will refer the matter to a tribunal. So we have a discipline tribunal that is sanctioned by law at the Standard Institute of Stockbroker. All right, and if they find that stockbroking firm and that particular stockbroker have actually conducted themselves in an unprofessional manner, we can strike the person's name out from our register. I would register the person. As at the beginning of this year, we registered 4 stockbroking firm, 4 stockbrokers for taking money and conducting themselves in a proper manner. So those are the various mechanisms that are designed to protect people. So that is why I'm sorry to say, I'm very frank here. I find it difficult to have sympathy for people that go out there and say, oh, they've lost money to somebody peddling some financial instruments or some get-rich on the internet.
Why not?
All right, because it is very easy to know the authentic people you should be dealing with. If someone says, "Look, I'm a finance firm, I'm registered by CBN in Nigeria," you can go to the CBN website and check the list of firms that are licensed as finance firms. If someone says, "Oh, I'm registered as an investment manager in Nigeria or as an asset manager, I'm able to buy it." To Google spec website takes you all of 2 seconds, and you will see the names of all as well as spec. You can go to spec. I think it's sec.org.ng or something like that. You can see the names of all the stockbroking firms and all the licensed capital market operators in Nigeria. It's there. All right. You can go to the stock exchange. You can take a stock exchange website, Nigerian stock exchange website. You see the names and you see the names of all the active stockbroking firms. You will see it there. So if someone is saying it's endless for financial products, and you cannot do that 2 second search, and then you go ahead and give 50 million, 100 million to the person, and the person now disappears to you, who do you blame?
You should do your own due diligence.
It's a due diligence. That is the essence of Google.
Gotcha.
All right.
So
this is what I would say.
Okay, and just remember, guys, listen. You can request to speak or send a DM to myself or to Obiano Juice. She's up there as one of the co-hosts. You can send her a DM or request to speak, and we'll put you on or ask a question. So let's change drift completely and talk about the business of stockbroking. Like, I want to invest. Most of the people here want to invest. They have a few naira, and there's inflation. So I'm a Nigerian guy. There's inflation of about 13 to 15%, whoever you believe. The naira exchange value officially 414, unofficially nearly 600. Where can I put away, say, 1 million naira if I want to invest? I mean, what I'm a young guy, let's say I'm 35, 40. I want to just make my money last longer than inflation. Maybe I have a 2-year horizon. Where should I put my money?
Well, I mean, the empirical data is that in an island and certain secret environments country, then you should be looking to invest in.
Tunde, I think you're breaking up a bit, and this is a very important answer, so I want to hear it clearly myself.
Okay, so let me take that again. Empirical data says that in an high inflation and high volatility exchange rate environment such as Nigeria, you want to target your investment mostly towards equities. All right?
Yeah.
Because empirical data shows that over the long run, equities typically outperforms inflation.
Okay.
Equities will typically outperforms inflation. I will say it in Nigeria. Last year, the inflation rate averaged something like 17%, I think, in Nigeria.
Mm-hmm.
Last year. The NSE growth index delivered 28% last year. All right? So meaning that if you have put money in the NSE growth index, you have outperformed inflation by a long time.
Even in Nigeria, the stock market last year outperformed inflation. What you're saying?
Absolutely. For some sectors, that's what I'm saying. For some sectors, that the index. So the growth index means that you are putting money in growth companies in Nigeria. All right, you will have outperformed the inflation. All right. So in high inflation environment, you do not tend to want to go into fixed income, because fixed income, treasury bill bonds, the return is already guaranteed, you're already fixed. So for the average return on bond last year was like 11%.
11.
So that does nothing for you when the inflation rate is 15%. All right. So in this environment, you want to look at equity stocks and shares as the better way to invest. That is the only way really to beat inflation.
Gotcha.
The second option we have now is of course commodities. All right.
Yeah.
Because the world is reopening. All right. There's very huge demand for commodities now because a lot of the economies that shut down before are now reopening very fast. So there's significant demand for commodities, and that is why you see oil price, for instance, that was averaging something like $40 last year. You know, is prior to the Ukraine war.
Yeah.
Actually rose as high as $70. So with the Ukraine war now, we're now looking at about $80.
More than 100% return. Yeah. So what is yeah?
So and as it's happening in oil, you're also seeing it in agricultural products. Wheat, maize, shea butter, cocoa. All right, all those commodities have also risen in price. Tomatoes, all those commodities have also risen in price by well over 100% last year, and they are likely to continue to rise as the world to reopen, and demand for those things, those commodities continue to rise. So we are talking of equities and alternative investments will be your best source of investment in an high inflationary and highly unstable forex environment such as we have in Nigeria.
So essentially, shares and alternatives, meaning commodities and all that kind of stuff. Okay, so let's go into shares. I mean, I use Arthur Stevens. You guys are one of my stockbrokers, and one thing I love about you guys is how you communicate information. I get tons of info on my WhatsApp, on email. I get your daily market reports. I get the stock recommendations, and every week you guys send out a stock recommendation. This show, we're not making an offer to buy or sell. This is all educational. So this is not an offer to buy or sell. I'm talking to the listeners now. This is not an investment. I'm not offering an investment, but I want Tunde to give us his own opinion on the top 3 stocks he thinks that I should put my money into. My own money, not yours. My own money into. So Tunde, if I had to invest in stocks to beat inflation and to make a good return this year, Tunde, can you hear me?
Hello?
Yeah, Tunde, I can hear you. Tunde? Hi, Tunde. I can hear you. Can you hear more? Can you hear me? Super. Thank you. Excellent, Tunde. So I'm just saying, right? If I had to invest my money, could you recommend to me, just me alone, right, 3 stocks you think I should invest into from the Nigerian Stock Exchange that would give me a good return, right? At least help me beat this inflation madness that is going on and probably get me in 2023 on the positive level. Can you give me 3 stocks? This is for me. This is not investment advice for anybody. It's just for me alone.
Right. Okay. So before I answer that question, for any stockbroker to be able to make any recommendation or stock pick for anybody, you have got to first of all profile the person, profile the investor. What I'm profiling, I'm saying, first of all, find out what age is this person, how old is he, what is his risk preference, is he a risk lover, is he a risk averse? What sort of return is he looking for? What is his objective for even investing in the first place? Why is he investing? Is it that he's looking to buy a car in 2 years' time, and 3 years' time, and he just wants to savings that he wants to put aside savings that can grow to enable him buy the car, or is he looking to get married or something like that? No. So you need to profile the person, profile the investor. All right. So in profiling, then it enables you to select to say, okay, look, this and this are the sort of stuff you possibly look to include in your portfolio. All right, that could possibly help you to meet your objective. So if I come down to Kalu now, I think I have a fair idea of how old he is. And I think I have a fair idea of that he's probably just looking to just put money away for the rainy day and all of that, and is probably not aggressively looking for growth. Maybe a bit of growth, maybe a bit of income. All right. So so if I look at the Nigerian economy and where we are going, and the fact that, as we had mentioned earlier, inflation is a major issue here. All right. You want to ensure that you select stocks that, number one, have the capacity to beat inflation. I have the capacity to pass along the effect of inflation onto their customer.
Okay.
All right. So, for instance, you cannot. It's probably not wise at this point to be investing in banking stocks in Nigeria.
Why not?
And people will say, okay, why? Because you see, banking in Nigeria is significantly regulated business. All right. A bank, for instance, cannot wake up tomorrow and say, because inflation is up, I'm going to increase the management fee I'm charging on your checking account.
Oh, interesting.
It has to be approved by the CBN. All right. They cannot wake up tomorrow and say, okay, you know what? The fee you are paying me on the card transaction, your debit card fee, I'm going to change it. I'm going to increase it because the price at which I'm buying this now from my generator is now higher than it used to be. They can't do that. They need CBN approval, and you cannot always guarantee that approval will come quick enough for them to be able to cover those costs. So you want to be in those businesses, first of all, that are not regulated to the point that they are not able to pass inflation costs to their customer. And I'm talking of company, for instance, like Dangote Cement. Dangote Cement is not regulated, all right, but it's regulated in as much as to the extent that to the extent that someone is taking the policy of their cement to make sure that it meets regular standard.
Yes.
It's not regulated as to the price that the man is going to sell the cement. All right.
Yes.
So if the price of gas is using to run his factory goes too high, he can wake up tomorrow and say, look, you know what, I'm adding 15 naira to a pack of cement, and take it or leave it, you have to buy. And don't forget, we're in an environment where we are still developing nation. The demand for infrastructure is huge. So the demand for cement, for instance, inelastic. No matter the amount of cement the man uses tomorrow, it will always be able to sell because people are building. Government is building roads. Bridges are being built. People are building personal houses. So there will always be, ultimate demand. So it can increase the price of cement without the volume is selling dropping.
That's a good point today. I didn't think of it that way.
Yeah. So the price of cement can go. I mean, it has increased the price from 2,500 to 1,000 last year. And the volume, if you look at the books, the volume is selling, keeps growing. That's why the fact that the price going up. That's one. Two, you want to look at consumer good company. All right, the likes of Cadbury, the likes of Unilever, the likes of Nestle Foods. People have got to eat. And Nigeria is a country of 200 million people. All right, so I mean, if the inflation goes on, Cadbury decides that they need to add 15 naira to the price of one liter, for instance. All right, people will grit their teeth, but they will go ahead and buy the computer because it's not like they have too many options out there.
Or like Maggi.
Like they have some. I would like Maggi, for instance.
You have to be so staples. Okay.
So those products can withstand inflation because their demand is near inelastic. All right. So you want companies such as MTN and Airtel. All right. Okay. So they are also able to withstand it. Because people will use data either they are working from home or they are working from their office. Use that. All right. People will make calls. All right. So you want to be in companies that are inflation proof. All right, because they are the ones that are likely to be able to grow their products and also respect prices in their product, such their return, so just such that their return can match up for this inflation. So
good point. That's a good point. Yeah, but let me drill you down today on that fact. I personally own Zenith shares, and those guys pay a ton of dividend. So I like that stock, and I mean I'm not asking anyone to go buy. I'm just stating my own personal preference. I buy based on dividend yield, like you said. I look at dividend yield, and I'm looking at as near as possible to the dividend rate to the inflation rate in Nigeria. So my dividend yield is my hurdle rate, more or less. If I look at the stock and it's giving me that good dividend yield, I tend to like it. So how is Zenith Bank able to do this? I mean, like you rightly said, they can't just arbitrarily increase interest rates or ATM fees. Where are they getting this money to pay a dividend? They are very, very good.
They are growing volume.
Volume.
All right. So they are not growing margin. All right. So how does a company grows through main means? All right. It's either you are growing volume or you are growing margin. So if you are growing volume and your margin remains same or is not growing, you are just still growing. All right. Okay. So a Zenith Bank, for instance, on a year-on-year, if you look at their gross income year-on-year, it's always rising. Their loan control is also going on a daily basis, right? So because of that, because they are growing volume, they are able to maintain their profit level and they are able to maintain the sort of dividends they are paying you. All right. So, but some other company, what you are saying, all right, is that maybe their volume is not growing. Okay, maybe their volume is not growing, but their margins are growing. Say, for instance, they are able to increase the price of their products. So they are not selling as much as they used to, all right. But because the price has gone up, they are able to maintain their profit level, all right. So on the issue regarding the part you mentioned, don't forget that I mentioned that these are making recognition. But what does this person? Is this person a someone taking growth, or is the person taking income? From what you said, your own focus is income. All right. So you are not too bothered too much about what the price of Zenith Bank is doing on a daily basis, whether it's going up, down, in as much as they are able to adhere to their they are okay with it. All right. So you are an income investor regarding that particular stock that you can be more investor. So you are satisfied, you're okay. All right. You understand what I'm saying?
Yeah, correct. Perfectly.
For a growth investor, he might be concerned that okay, look, the price of Zenith remains within the range 25 to 27 naira long.
Yeah.
Do you understand what I'm saying?
Yeah.
And he will rather a situation where the price is rising, rather than having to wait for for dividends.
That's true. I mean, like you're matching me to my objective. I get that's pretty true. So I mean, but what else? So you said we should look at consumer staples. We should not look at banking. You for instance said alternatives.
So you want to look at
Industrial. That is Dangote, right? That industrial is over. It's skewing that industrial. Every time I see industrials, it's doing very well. But I remove Dangote and I don't see anything else there.
Because Dangote 25% of the market capitalization. So if not only the index will probably lose like 25% of its value.
Yeah.
Right? So it's still the market itself generally. All right. So industrial we are talking of Goa cement and the like. All right. Then consumer goods, we are talking of the delivers of this next year. The like. All right.
To the Cadbury has not been doing pretty well for a while now in terms of their results. Not the product itself, but the result has been atrocious for a while now.
I think it's and that is more about management.
Okay.
More than the company itself is about management.
Yeah.
I think that if they are able to, and I think that is also probably true for Unilever.
Okay.
All right. So I think if they are able to ultimately get their management house in order, the potential for those companies are quite significant.
Yeah, I mean, they have good brands, they have the history, but is it because of importation of cheaper goods into Nigeria, or is it the cost of doing business in Nigeria? Because I'm not sure how you can manufacture in Nigeria and still make a profit. With fuel ×2, with insecurity, with infrastructure, it's difficult to manufacture from Nigeria and make a profit. That's what I'm thinking.
Nestle is doing it and doing it and showing phenomenal growth.
That is true. That is true.
So that is why I said it's more about the management at this point, rather than anything else. I think the management made some strategic mistakes in the past. Particularly, I would say for the likes of Unilever, for instance, at the time that Nestle was making some significant investments in Nigeria. I think, it depends again on the kind of analysis we have. The time, say, about 10, 15 years ago, while Nestle was actually increasing their footprint in Nigeria, Unilever was actually reducing their footprint or reducing the sort of investment they should be making for the future of the company. And I think that that's sort of caught up with them now. All right? While Nestle was building new factories and increasing their route to market in terms of products and all of that, it's just one actually taking this sort of investment which is required to grow. All right? So we can argue all.
Yeah, I think you have a good point. They build skill and able to reduce their cost of operations, so hence they can still sell. Good point. So now, can you walk me through why is it that property companies like REITs do not deliver good returns? I would have assumed that the UPDC, that's the UAC Property Development Company, that has property in Ikoyi, in GRAs, should be a big passive income generator in the stock market and should be having investors fall over themselves to buy that stock. Why is it UPDC property in a market that Nigeria that needs property in prime area, location? Why is UPDC not making profits or giving out wonderful dividends to investors?
I will say, and this is my personal view, that the forex issue would have also affected the lives of people for good decisions. As you have mentioned, most of the companies that have I grow areas, all right, that are only really affordable for the high net worth individuals.
Yeah.
So the question is that a lot of those are not around at the moment. All right. When you are building properties that's commanded annual rent.
Yeah.
Not too many of them are out there right now. So not too many people have the capacity to buy or rent those properties at the moment.
So is it a type? Is a type of property they own, not the business model itself?
I think the type of the properties that they own has back on the part of the because most of the real estate that are doing exceptionally well, you will find are actually operating in medium class market.
Yeah. That 2-3 bedroom flat in Lagos, Abuja, in Yaba, and Gwarimpa. Yeah.
So those high high level people that are able to buy properties. I don't know how many. There are so many of them out there. But I mean, it's not able. That's just my own.
Okay. Yeah, I don't know. I don't know if Obenuji has a question. Obenuji, thanks for the retweets for what Tunde is saying. If you want to ask a question, yeah, go ahead. Tunde Obenuji is our manager of the spaces, helping us just create and send out those messages and all that. Obenuji, you've got the floor.
Hi, Tunde. Thanks for all the patience. Very disciplined. Okay, so a few questions might come into the DM, and somebody had asked me, because she was about 20 years ago, but you can't remember where he gets his certificate or document. So, any hope of him getting his investment back? I don't have a complete perspective. Okay, so take that, respond to that, and then I'll ask the second one.
Yeah, just your
You mentioned the name of the company? Because he did,
So yeah. You see, your investment is not long, even if it was bought 30 years ago. What has happened in the Nigerian marketplace in the last 5 years is that all the stock have been dematerialized, i.e., all your shares now is CSCS. Alright, so if you get hold of the stockbroker and you give them your details, they will be able to do a global system for you and be able to pinpoint where those shares are actually domiciled at the moment, whether it is domiciled at the registrar or whether it's domiciled with the stockbroking firm. And if the stockbroking firm where it is domiciled is not active anymore, you can now ask that the stock be moved to an active stockbroking firm. Alright? So the shares is there. All you need to do is just get hold of the left and they'll get you the information as to where it is.
Okay,
and you most likely also get your outstanding dividend for the last 20 years you have not collected. You can't possibly.
That's good to know.
Yeah. Okay. I'm sure a lot of people would be glad to hear this feedback. Okay, so the second question,
I'm sure Kalu can share the name of some of the people, some of the investors advisors cash person to track the shares and also collect their dividend.
Okay. Mm-hmm. Okay. So, well, the second question I'll do. I'm just saying, I don't think this is possible, but I'll still ask. So he's asking if I invest in any other currency and get returns in the same currency on the Nigerian stock exchange.
Yeah, you can invest. Obviously, you can invest in Naira and get your returns in Naira. You can also invest in dollars and get your returns in dollars. Alright?
On the Nigerian stock exchange.
Yes, in Nigeria, there. It's not necessarily on the Nigerian stock exchange. There's another platform called SMDQ OTC Exchange. That is the platform where fixed income instruments such as bonds and treasury and euro bonds are traded. Alright, so you can invest in euro bonds through that platform in dollars and get your returns also in dollars. Alright, again, I mean, if you contact investors, advisors of those businesses, they can help you.
Okay, thanks. So another question, somebody said that his friend started a forex trading company where he was offering 50% in terms of the investment on a monthly basis, but that the bank then froze his account because he didn't have necessary documents to prove the financial investment company. When he was told that he prepared an EFCC incorporation certificate and stake registration. So he said his friend is going to do work for the EFCC and has another but that he needs advice on how he can go about his stake registration. So is that something you can help?
SEC does not register foreign exchange dealers.
True.
They only register playing in the capital market and in the investment space. So it's still going to have to go to, if it's forex he wants to do it, he's still going to have to go to this BN to get that license.
I think today this is one thing that I see quote unquote people do to claim that I have EFCC registration or I have DATE registration. Those things don't matter. If you are dealing publicly, if you are going to take money from the general public, you have to get registered. And it's not, SEC is not interested in currency or whatever, but EFCC is not a license to do any trade in the securities business. EFCC doesn't give you anything. Yeah.
Absolutely. You are just going to EFCC to register so that they know where to find you the way you go now. Otherwise, they could give license. All right.
I think.
I think the guy who had asked the question about if he could get his investment back, he's asking if you can do that for him.
Yeah.
That's why I said Carlo would post the details of perpetual, our phone number, and probably email address to his and this gentleman can contact her and she can help with that process.
Okay, great, no problem. Okay, so I'll just go ahead and ask the last question again, and then I think we have some people who have requested to speak, so we'll take that. And the last question is, what happens to your investments if the company that was previously listed on the stock market and that you bought shares from, suddenly they are listed from the exchange? What will happen? So I
the person give an example of the stock.
Okay, so I think the person is here, so he or she can respond to that. Just send me a DM so that I can take the question. If you have the name of it. Okay, so we just take a seat. Somebody already has requested to speak. Can go ahead and take my. If you can hear me, I take the question. But while we're waiting for that, I think another question I was going to ask is, so I know that we are talking about, this question is to you, we are talking about fintech apps and the inability for them to provide more of the technical advice on the stocks and areas for people to invest in. But I know that some of the apps, some of the fintech apps are actually offer service beyond just buying stocks from them. So there's actually another, I know one or two apps offer services that to help you to trade. They can also help you to trade. Now looking at talking about the further issue of stockbrokers and change people to career in that space, in the stockbroking space. Now, how will they penetrate that? The world is going digital. So, beyond all of that, is there a way that fintech can still leverage on this human interaction and human knowledge beyond the algorithms?
You see, the essence, like I mentioned, the essence of having is to ensure that the player carry out their activity in a professional way so that people don't get lost, people don't lose money. Alright? We have a few fintechs, for instance, that were providing the service of helping people to trade on Nigerian stocks. We have Bamboo, we have Taka, Buako, right? Ultimately, the SDC have to ban them. The SDC in Nigeria banned them, and they have to now go and get their SDC license. Now, a few of them have SDC license. So they are now working under the rules of SDC. If they mess up, they know they can be stopped. All right, from practicing people. Okay, all right. So that is really the whole idea. I think there's really nothing that your traditional stockbroker is doing that the fintech cannot do. what we are saying is this: do it in a regulated environment. Don't do it that you know, and giving this on your app. Then I wake up tomorrow and that app is not functional again. And I do not know, maybe you are planting Cyprus or some countries where in the world I cannot reach you. There's nobody else I can reach to say you could give me my money back and you disappear. We know people that have lost millions because of trading on Bitcoin. Because the person they give money just disappear. That's all. Finish.
Yeah. Okay.
All right. So the essence of the regulated market is that there is a third party there looking and saying, this person that is taking your money, don't worry, we know him, we know how to find him. If he messes up, we will get him for you. That's all.
So just like a layer of abstraction.
All right. I think we have someone.
I think already if you can quickly speak, but before already the company, the person who talked about delisted, like somebody was delisted, is Pioneer Kitchen Limited, that's actually in Ghana. So it's actually in Ghana, that's what that's
if you buy a company that gets delisted, all right, the listing can happen for two main reasons. It's either the company is bankrupt, all right, in which case the listing is voluntary. The stock exchange itself will decide to delist the company because the place they're in, all right. So, Bata Nigeria, I'm just Mr. Taylori that would be aware of. Bata used to produce the standards which we were then and later. In the past, they used to be very good companies instead of companies. But those companies went back and they were doing. All right, so naturally, if you invest in that bank and it's of course, that's the again. Obviously, that is one of the upside of investing in shares. All right, so the upside of investing in shares is that your return is not hard. You can make returns in thousands of percent. And the downside also is that because the company that you invest in can. All right. The other way by which this the company deciding on this that they don't want to be a public company anymore. They would rather be a private company. All right. So prior to 2 years or 3 years ago, MTN Nigeria was owned by the South Africans and just a few. But recently, they decided to export shares to the public, and they became this. They started again, right? Okay, so a company will decide that, you know what? Yeah, we are not going bankrupt, but we just go through the problems of the issue of spending more. So because of that, we are going private. So for instance, 7up Nigeria is still an active company, they are still making money, and they still public, but they deleted Nigerian company that produce Coca-Cola. Used to be now they are listed, now they are a private company. It does not mean they are dead. They are still processing. You understand? It's just now that you will not see their shares being listed on the stock exchange anymore.
I think that I think you're breaking a bit, but I think that point is well made, that the listing does not mean that the company has failed, right? So, I put up the contact address for Arthur Stevens. So I would advise, if you have any issues with dividends, to track past dividends, to trace all that, please give them a call on Monday. I have personally done it with them. They're able to go to registrars and do a mandate letter for you and to get back those dividends that you have maybe missed out. So I've done it with them before personally, and they've done a good job. So reach out to them, contact, email, phone number is all there, and then they can attend to you. So I have you here at least for the next 10 minutes. I want to see if I can get a few questions in. So what is your view on currency, that's holding dollar or holding crypto to avoid this inflation? What's your view of those asset classes as investment? Do you think crypto is an investment? Do you think dollar, that's holding dollar itself an investment? Sorry. We must ask that question. My fans here always want me to ask everybody, what's your view on crypto? So I have to ask, that's standard.
Crypto is one that I'm not really much attention to. Personally, holding dollars or holding currency, I would say you should how accept that one should invest in. I'm always around looking for the well diversity, the well portfolio. So you should always have a portfolio that is made up of big-based income, commodities, and currency. And the essence of the diversified portfolio is that your risk is so diversified. So that if one asset class isn't doing well, all right, at least you are hedged with another asset class. I would never to have their assets to have too much of an asset concentration. So I would not say, because of inflation or forex, what's it called? Forex instability. Now go and put all your money. You don't do that because you don't do that. More often than not, the fund you get from those accounts you put your foreign currency in, it's not always very competitive. Especially if you are not very naira. If my friend, for instance, is in dollar, and I put my money in an investment that and inflation rate is 5%, I'm not doing myself any favor. So I will only put money in foreign currency in order to protect my portfolio, not because I'm targeting returns. It is to protect my portfolio, not to target foreign currency. Do not. It helps to insulate your portfolio, but it does not deliver. It does not give returns in terms of returns fast.
Okay. Good question. And today I want to circle back to in that international association you spoke to us about. I just want to clarify. There's a gentleman that sent me a screenshot of the CIS website. I think he's talking about is it the Chartered Institute of International? He's trying to open up the Chartered Institute of CIIA.
Yeah, that's another institute that is based in Switzerland. Which CIS is also affiliated to. So if you get the CIS qualification, you also get to register, the authority register with that association and become a member of that association. So if you get to Europe, if you get to Europe beyond the UK, if you get to Europe, you also get to be able to practice as an investment manager if you have that qualification.
Okay, so that's also a pathway for you, just like and what's the exact the one you spoke about? Is this CTU? Can you please spell it out so I do that again, please?
CISI.
Okay, CC.
That's Chartered Institute of Securities and Investment UK.
Okay. All right, gotcha. CC UK. All right, gotcha. Just making sure I got that in there as well. Then there's a SEC. So the question for you: what's the SEC role in protecting investment funds? If I invest in the stock market and I lose all my money, is that an NDIC? What happens, more or less?
If you invest in the stock market and you lose your capital, nobody is to return it.
Gotcha.
500%, and nobody is going to ask you to bring any amount. Investing is different for states. I think it's important that your audience are clear about that. Investing is different from savings. All right? When you open a current account or a savings account in a bank, all right, and you put your money in it, you are saving money. When you buy financial instruments, you buy shares, you buy security, treasury bonds, commodities, all right, futures and options. You are investing. It's different. When you investing, you are taking risks. In savings, you are not supposed to be taking risks because all you've done is to open an account and tell the bank, please keep this money for me until the day I need it, collect it back. Which is the reason why you have a deposit insurance such as NDIC or so.
Yeah.
Savings for savings account. Alright, so that in case the bank, the guy that the bank will give the money to hold up, like before you could collect your money back. And the FBI is saying, look, I'll guarantee you that if this person you give the money to save for you isn't able to give you back, I will give you back your money. But in investing, the essence of investing is risk and return. So you know you are taking a risk because you are expecting a return. But at the same time, you might not actually get that return. And that is the essence of the risk. Alright, so nobody's guaranteeing, nobody guarantees any investment. And I mentioned that earlier. Nobody guarantees any investment. You go in there because you are taking a risk and you are expecting a return. Alright, and the man's game is that the higher the risk you are taking, the higher the return you are also expecting. So it's very big and you also lose all your money. Right?
Okay.
So
that makes sense. And I still got Oladele here that is trying to speak. Oladele, I don't know if you're still able to speak. Otherwise, I'll just move on. I just want to make sure I'm giving you the opportunity. Oladele, can you speak up a bit, please? I can hear you, but speak up a bit, please. I can, but still a bit faint. Just speak up a bit. I can hear you, but you're faint. Tunde, can you hear him clearly?
No, not really.
Yeah, if you speak up, if you're on speakerphone, just speak up so we can hear you, sir.
Can you hear me now?
I can hear you. Go ahead.
Thank you for the job you're doing. I actually one of the platforms that provide information for money stuff. So, but the concern I have around that by the central bank because of the I want to have for the experience so far. What can you say start of which provide platform on one share. Now, the second question I have is I want to find out the requirement for every member required for anybody that wants to participate on Nigerian process. Now, as a way of contribution, what you said about deposit insurance, I have so, as the Alati explained, CIS provides the deposit insurance your coverage for personal for I know there are institutions where CIS also provide protection for but I'm aware that investment protection has provide provision for investment protection fund, and I know that the fund is set for investment protection. So I want to find out, maybe Solati can speak to what that fund is available for. Is in terms of savings, stock brokers, or in terms of what you result of investment activity. So these are the classifications
Tunde, did you get his questions?
Yeah, I think I did to an extent.
He's talking about the second the investor protection fund.
Let me start with this last question. The investor protection fund you are referring to is not meant for people that took risk and lost their money. It's meant to restitute people that, for instance, give money to a stockbroking firm, all right, and through the negligence of that stockbroking firm, they lost their money. All right. So, for instance, okay, you give money to a stockbroking firm to buy shares for you, and before they could buy those shares for you, something happened. That firm falls off. All right. That investors is meant to give you back your money so that you can buy the shares. All right. Or, for instance, you wanted to buy a stock at a particular price. The stockbroking firm did not buy it for whatever reason due to negligence, and you end up losing money in the process. All right, the investor protection can restitute you. So if that investor protection fund is there in order to make up for risk involving the activities of operators. Not to cover the risk you take of taking an investment on your own. Right? So I hope that is clear.
So it's not when you take the risk. It doesn't cover the.
It's not that you're buying across Nigerian streets at 100 naira and get the price to 20 naira, and you expect that they should make it up for you. All right? No, that's not for it. All right? You understand what I'm saying? This will stop breaking them money. They give them 1 million naira to buy shares, and you didn't buy the shares. Alright, and hold up. Okay? The investors come and give you your 1 million naira back in order to acquire the shares to reduce your 1 million naira. You understand what I'm saying?
Yeah.
Or you sold shares. Okay? And then the stockbroking firm don't pay you your proceeds. Alright? They are not able to pay your proceeds. Alright? The investor firm can step in and do this to you. Okay? So that is what it's for. It's not for your own investment. It's not meant for your investment activities. Alright? And then I think the second question has to do with
he's talking about the trading apps. Yeah, if they are.
That they were banned by CBN and all of that. So, yeah, the expense of banning those apps, I would assume that is truthful. First of all, is to ensure that Nigeria is not an open environment that's not right. All right, you are not allowed to trade in financial instruments without being registered with the stock exchange. So if those platforms are going to be inviting Nigerians, all right, to participate in the financial market, they are required to register, and most of them have not done that. They just started with the app and just went bonkers with it, and that's why they are stopped. That one. So the second part of course is that the issue of FX, all right, is a very sensitive one in Nigeria, especially when it comes to money laundering and all. CBN does not the situation where those platforms are used as a source of longer money. Without anybody being able to check what they're doing. All right, and that is why you are banned from being able to access forex market. And of course, also the speculation they were doing was also affecting the ability of the CBN to actually manage foreign exchange. Foreign exchange. All right, foreign exchange, which I mean today, that is needed for the developmental focus by being used to speculate in securities market. Right? So at least that is the argument of CBN. That is why they have to stop. Alright, so I'm just putting that out there. Those are not my own official position, those are my personal thoughts. Right?
Correct. I know that I think it was Rise Investment that took the CBN to court, and I think the judge said that there is no actual circular that has banned them. I think CBN's point was that they were taking forex. That's CBN's point. CBN is not questioning if they are legal or if they are fraudulent. CBN is saying that they are taking forex. That's their issue with them. So the firms could be real, they could be, but CBN is afraid of the forex side of it, not that they are afraid of the SEC, they are illegal or whatever. I think I understand that that's what they're going to. Today, we have a few guys waiting to speak. I have you here for 2 hours. I'm about to let you go, but I have Focus and Drive also wants to say what. Focus, can you make it very short so we can let Tune go sleep? He's been here for 2 hours and we just want to respect his time. Go ahead, sir.
All right, very good. Good evening, and thank you for having me on Spaces.
You're very welcome.
Now, this is in relation to the last guy who spoke about his stocks going out to zero. And here's just a few advice on that. Is number one, stockbrokers and investment managers and professionals always advise that you spread your investment right across different financial assets. So, for example, you can have 50% of your investment in stocks, 30% in bonds, and then remaining 20% spread across alternative assets like cryptocurrencies, real estate investments. So I would like to guess the honorable gentleman to touch upon that. And the second question I have is, how forceful is our SEC, the Securities and Exchange Commission, how forceful are they in punishing companies who may be fraudulent, like who are present on the stock exchange and don't really give back value to their investors, right? For example, I'm talking about Dangote Sugar Refinery. I bought that stock in 2005 for 18 naira per share. Today is trading below that or right around that area. Stock has never really gone for.
Yeah, but if the stock has gone down in price, that's the market, right?
Yeah, but in 20 years, we should have value for that.
Yeah, but it's still gone down in price. I mean, what I'm saying is it's still a market pricing that stock at that price. That's the market. It's not Dangote, it's the market pricing. I'm just arguing now, going back and forth with you now. It's not Dangote. Dangote has no business anymore, quote unquote. Their stock is in the market. If they have a good result, or we talked about Wall Street bets folks buying dead companies and it's going up in price. So if your stock price is down, is that Dangote's fault, or is that it's not the market basically saying this is what we price that stock at?
I don't think so, because it was an IPO and it was the company and its investment advisor that priced the company at that particular price.
But then, if you read that IPO, I'm very sure if you read that IPO, there'll be a prospectus one in there saying invest according to your advice from your financial advisor, and if you're investing, all risks and responsibilities are yours. There'll be somewhere there. The point I'm trying to make is this: if you buy something that is publicly traded, right, there are always disclosures there. Always risk disclosures are going to be there. If the market has priced that stuff from the IPO down to pennies, that is the market.
Very good, Mr. Khan. But I mean, it's like Rivian Automobile, right? Last year, after merging and then listed to raise back, right, for a particular price. Like recently, the SEC wrote to them and said, look, you guys have a price outside that is not so price. You guys made certain promises, IPO perspective. Then you guys haven't been able to fulfill. And you guys go to your books and you go for all other documents there. So the reason why I'm asking the question is because of investor funds protection here. It's how strong is our SEC really at holding companies to their words, right? All the information that they provide in their prospectus, their day-to-day operations. How firmly do we enforce and make sure that these companies are coming out and they're giving investors details of what's really happening there? Because if we don't have it, people will lose interest and they will lose faith in our stock exchange.
Let me just give
Yes.
Firstly, pricing of IPO it's not by guess. And they are in a nicer, right? And of course, it is the perspectives. You can invest more and it's also outside of money, yes. Of course, every company looking to get to risk, they can help. So, yes, but I want to look at that. And to make just
these are options that they have passed and realizing. So I'll go all and because don't forget that all the pricing is pricing of these insurances are based significantly on the bank and we are going to be able to from down.
Tony, you're breaking a bit, yeah.
Yeah, if we're able to borrow money at 10%, we'll be able to produce so and so tonnage of sugar and all. So they will make assumptions, they will make forecast. You and your investors, our investment advisor, have to be able to look properly at the prospectus and come to the conclusion that you agree with their forecast. And that based on their forecast, valuation they have put on that stock is acceptable to you before you go ahead and buy. So there's a caveat emptor, which is the reason why they will always at the back at the bottom of every prospectus before you invest, talk to your stockbroker. They will always put there. They will always put that caveat emptor there. After said that, even after the list, don't forget, it's part of what is required of them is for them to release their quarterly account every quarter. They release their quarterly account, so they release their financials at the end of the year. So people are able to analyze how they are doing, all right, based on the forecast they made on their prospectus. So continue follow up because they are releasing their results every 3 months. So after the first 3 months, the fourth 3 months, the third quarter, you are able to tell whether they are able to meet their forecast or not. And if you feel that they are not moving in the direction that they are supposed to be moving, you have an opportunity to sell off the shares. So you probably wouldn't need to hang on to it for 20 years if you have actually been following the company. Because I'm sure that if they don't be releasing, in fact, if they don't release their quarterly accounts for 2 quarters in a row, the stock will be suspended. They will stop them from trading. So for them to have continued to have been trading continuously for all these years, it means that they have been releasing the results they are supposed to have releasing. Yeah, and you are supposed to take those results and make of it what you will and take your decision as to whether you want to sell or buy. All right. So the SEC has set rules, and those rules are always follow them. And if they don't follow those companies, they can either suspend them trading. All right. So, but the investors instead about fast to ensure that they are paying the short that they need that best.
I think that's a good debate we had with him. I think it's fair on both sides, and I hope you understand that I'm being a devil's advocate when I push back and comment on those questions. So then we're about to let you go, but the last question, I just want to ask you the last question and let you go. Someone, I have Dexter saying he's a CFA level 2 candidate that upon getting a CFA, that's Chartered Financial Analyst certification, does he still need a CIS charter to be allowed to trade? That's going to be my last question.
In Nigeria, yes.
In Nigeria, yes. So I think he has heard you loud and clear.
But the only what I would say as Larry is, I think CFA at the percentage of exemptions.
They get exemptions, okay?
They get the exemption for some like practices and exam and
Okay.
yes.
All right, and this is the final one, last one, is because you didn't answer the question, and people are reminding me that you didn't give me my top 3 stocks to buy. They want to know what you tell me, not them. They want to know what you tell me to buy.
Well, I mean, I mentioned it. If I look at the bilateral, I mean, I would say MBN telecoms at the front.
So today I heard you say MTN. What else? Dangote Cement and Unilever. So MTN, Dangote, this is for me. And you are saying this to me because you know I'm a dividend guy and I'm not looking at the market price per se. I'm investing just to get dividends. So you are pushing me to Dangote, Cement, MTN, and Unilever. All right, this is only for me. This is not investment advice for you out there listening. Please know this is not, we're not giving you a buy or sell recommendation. We're just being educational. And today went through my profile. He knows my risk profile. He knows I trade with him. So he knows me. Without knowing you, he cannot give you a recommendation. Tunde, I just want to say thank you. We've been here for 2 hours and 15 minutes, and we have almost 200 guests that have stayed with us throughout the spaces, listening and asking questions on DM and all that. And I just thank you for allowing us to ask you questions to tap into your brain. We are pleased, and we allow us to call you back should we ever have that need. On behalf of Obiano, do you want to say bye to Tunde? Obiano, oh, there she is. Okay.
Thank you very much for all the tips you have shared this evening, and of course, we're always looking for ways to secure the brand. So thank you very much. And to everyone who joined from wherever you are, so thank you very much. It's been a pleasure hanging out with everyone this week or this evening, morning, afternoon, wherever you are.
Yeah.
For today, please stay safe and.
Thank you so much. So today, thank you so much. We do these spaces every Saturday, 8 p.m. Nigerian, West African time, where we just talk about investing, personal finance, and money. And we always invite someone to just come and tap his brain and to make us better investors and to understand the economy better. So we are grateful that you took off our invitation, and we just want to close by saying thank you. Just remember the guys out there that are under bombs and shells. We just pray for them that God will just basically protect everyone and bring sanity to the world, not just for human life, but it's just a good thing to do. Let's just have peace if we can. You know, it's not too much to ask. Today, thank you so much. We appreciate you doing this.
It's my pleasure. Thank you. I really enjoyed it.
Thank you, sir. Thank you, sir. All right, guys, take care, sleep well, and have a great weekend. I'll see you guys next Saturday when we'll have another guest to talk again to us about money, personal finance, and of course, the economy. On that note, guys, take care. Love you all. Bye.
Yeah, bye.
Bye.
Bye.